What's up, business heroes? My name is David Steininger, and this is Self-Employment Sidekick, where we share tips, tools, and other tidbits to help you navigate your self-employment journey. Today, I am joined by Garrett Alexander, a certified public accountant and partner at Game On Financial, where he and his team provide tax, finance, and business support for content creators specifically. But we're going to talk about some stuff that any small business owner can benefit from today. Garrett, thanks so much for coming on the show.
Yeah, thank you for having me. Looking forward to talking and hashing it all out.
Now, I definitely want to get to know more about you and your business, but I want to jump right into a pretty meaty question, if that's okay.
Yeah.
What is, in your experience as an accountant, one of the biggest tax mistakes or missteps you see new business owners making when they're first starting out?
Straight into it. You weren't lying. Honestly, I'll tell you, maintaining quality books and records. And that sounds so boring, so like, oh gosh, here we go. Nobody gets in the business to do the bookkeeping, right? Nobody ever starts a business, says, I have this great idea. I can't wait to get started on it so I can do the bookkeeping for it. Like that, nobody wants to do that. But it is imperative that you do because, it's the core of everything. One, if you're not keeping adequate books and records, I would argue that you're probably not truly, even if you say you do it in your mind, you're not keeping up with your expenses and you're probably spending more than you make. That's where people get into trouble first and foremost anyway. But beyond even that, when it comes time to do a tax return, right? And that's the reason I bring it up is because this is where we see at the end of the day, everybody's got to file a tax return at the end of the year. So when you go to do that, if you don't have your income and your expenses already categorized, at least in some way, shape, or form, you're going to be in for a world of hurt because what's going to happen, every accountant is going to be busy. They're going to ask for the information. You're not going to be able to give it to them. You're going to end up extended. Then that's going to drag on. You're probably going to pay penalties and interest on the tax that you did owe. And you start behind the eight ball if you don't keep those things, at least I would say month to month, but even maybe every quarter, right? Just keeping your books and records. It's just the basis for making decisions and everything you're going to do and how you run your business.
Now, is that something people can DIY, or should they not even touch it and just kind of hire out that work to an expert like yourself?
Yeah, that's a great question. I'll tell complete transparency here. We run a bookkeeping practice, a tax bookkeeping practice. So, of course, my incentive is to have everybody just come to me and pay me to do it. But I'll be completely honest. We have a lot of clients who are very capable. And quite frankly, we probably set it up and do a lot of, we call it onboarding. We'll create the QuickBooks file. We generally use QuickBooks, so we'll create that or a Xero file. And once that's done and we kind of set up the bank rules and stuff like that, we can actually turn it over to some of our clients and they handle it. We've had situations where that's gone south before, of course, but it's kind of person by person basis. Some people are very capable of DIYing it, and some people truly, I wouldn't say they're incapable. It's just, it almost doesn't make sense for them to do it. It's not worth their time or their effort, and they're not going to be very fast at it, very quick. So why bother? If your business can afford to do it and you can just offload that, that's a great task to delegate pretty early on, assuming again you can afford it.
That's really encouraging to know that, some people can do this. I think especially if you're just starting out, you might not have the revenue coming in where you feel like you're ready or able to afford professional help. So it's nice to know that there's some stuff that you can do on your own. But is there anything that people should absolutely not mess with? Or let me reword this. How can people know that they're in over their head and it's time to call in the cavalry?
Yeah, that's a good question. There are probably three pretty solid tiers there, and I would say bookkeeping is probably the easiest way to, if you're a business owner, you want to get your hands in the mud a little bit, and you want to do a little bit of this on your own and DIY it, maybe to save a little bit of money. Bookkeeping is a great start because it's just informative, not just from a tax standpoint, it's informative of your overall business operations, right? If you're tracking your profit and loss and you know where your money's coming in and out, that's good. When you get to your tax return, right, that's where some people could DIY it, some people could TurboTax it. You may find yourself, okay, I've got the bookkeeping done. I feel pretty good about it, but now we're at the tax return. Now I'm like, this is foreign language to me. I want to get somebody involved. And a step above that is where you absolutely need somebody involved is when you're considering maybe an S selection for an S corporation, or you have multiple partners in a business, right? It's not just you operating, but you may have a business partner. Now you're getting into a tier of you don't just have an individual tax return, you have maybe a partnership tax return, Form 1065, or an S corporation tax return, which is 1120S, Form 1120S. At that point, you need to get assistance, because every tax return I've ever seen that somebody tried to DIY that was a business and entity tax return, it was butchered. I've never gotten a business tax return where the client prepared it themselves and it was correct. If it came from another firm, that's a different story. But when they do it themselves, that is usually it's not good, and we have to go back and amend it. So I would say that's the definite case where you need help.
Hey, I just want to take a quick moment to say thank you to the sponsor of this episode, Relay. Now, Garrett and I were talking a lot about how to manage your money, but where do you keep your money in the first place? Relay is my favorite business banking platform. They make it super easy to manage multiple accounts with no minimum balance requirement, so it's a great fit if you like Profit First or another system that uses multiple accounts. They're even the official partners of Profit First, and they have an auto transfer rule that allows you to automatically divvy up your income into your different cash buckets. It's really cool. There's a lot of other features that you can learn more about in my full review, which I'll link right here and in the description. And now they're getting into the business matchmaking game? Keep watching this video to learn how Relay helped connect me with Garrett and made this interview possible in the first place, and how they want to connect you with tax, accounting, and other professional support to help keep your business moving forward. If you want to take Relay for a spin, be sure to use my link sidekick.show/relay and you'll get a nice little welcome bonus when you open and fund a new account. That is sidekick.show/relay to get started with one of the best business banking platforms in the whole wide world. Now, back to the interview. So just starting out, keeping clean books, for the most part, you're just recording income and expenses, just keeping track of that, right?
Yep.
What's tier 2? What's the next thing that people might need to learn or hand off? What's the advanced version of this that people need to be thinking about when it comes to managing their finances?
So for managing finances, taking the information. So once you get everything categorized, printing a report, one of the most common ones is your profit and loss, and looking through the report. And I would encourage anybody starting out to do it month by month. That's generally a pretty good cadence in the beginning. And just looking through the profit and loss, and over time, once you get through 3-6 months of income and expenses, you can kind of start seeing trends in your business. So for example, you spend a lot of money on travel every month. Well, now how much easier is it to form a budget, right? The budget numbers that you're trying to come up with you're not pulling them out of thin air. You can just look over the past 6 months, I've spent this amount of money. On average, I can probably expect to spend that amount of money. And the best part about it is, as you go through years, now you see okay, I have slow periods of the year. I have, I'm a tax accountant. January through April for me is really, really good. June through August is not as good. So, using that data, you start to see trends. And the same could be said for your balance sheet. Just if nobody knows what a balance sheet is, it's just a statement that shows basically where you are in a period of time as far as your assets and your liabilities are. That information, people dodge budgets in their personal life because it points to some areas that maybe they don't truly want to fix. Spending habits for all of us, not just clients. It's all of us, me and you included. In business, this is business. You need to know these things. You need to be able to track these things, because personal life, the way you spend your money, that is your prerogative. But when it comes to business, especially if you have employees and you have people, maybe other owners in the business, you need to be tracking these things because you owe it to them to do so. If nothing else,
it all
you owe it to
trickles
yourself.
down.
It does.
Yeah, it trickles down. What you do with your business. If you don't have a business, you don't have a personal life. So you want to spend your money the way you want. On the one side, you need to make sure that you're keeping things tight on the business side. You're bringing up a great point. It's not just doing it because you have to, but this is going to give you really good, helpful insights into your business, how you're doing, and showcase opportunities to make improvements or kind of flag certain problems that you might have. When you plug everything in, there's the tax piece, there's the compliance piece, but it's also an opportunity piece to help you know how you can run your business that much better. There's also, can we talk a little bit about, how we can save a little bit more money and keep more money in our pocket and get that into our personal side at the end of the day?
Like you said, the business trickles down to the personal life in almost every case. Our immediate thought is, how can we save this person as much money as possible? I'll tell you right now, outside of bookkeeping and all that, that's the easiest thing that a client could do. The best thing we as accountants can do for you generally is going to revolve around entity selection. So maybe you need an S corporation or something like that. And if you don't know what that is, I mean, obviously we can talk about that. S corporation, again, that's where it does start to get a little complex, but entity selection is going to be the first thing. And then if we
got
really
time to get complicated, I would actually like to talk about S corps.
Yeah, of
And
course.
maybe just touch on what that is and what are some of the benefits of that, and how do you know if that might be a right move for you?
Yeah. So in essence, an S corporation is just basically you checking a box to tell the IRS that instead of being taxed as a sole proprietor, I want to be taxed I want my business to be taxed as an S corporation. It's just an election you make. You do have to file an additional return, but all of your business income and expense items flow through that tax return now and not your individual tax return. The reason we would do this is because you have two things here. On one hand, you have your sole proprietor Schedule C. All of that income, net income, income minus expenses, all of that is subject to self-employment tax. And that hurts most businesses. Self-employment tax is brutal because nobody ever plans for that. It's 15.3% of your business income. You do get a deduction for it on your individual return, so the net effect is not it's not an additional 15.3%, but it is very still impactful, especially if their sole source of income is self-employment income. That hurts because you pay income tax and self-employment tax. But when you swap over to an S corp, now what happens is that self-employment tax piece, which is really just FICA, Social Security, and Medicare, we divvy that out between you as an owner and you as an employee. So as an employee, what do employees get? They get wages, right? And on wages, you pay FICA and Medicare tax. As an owner, you get distributions. And that's just basically, if you have an S corporation and you have a business bank account, you just pull the money out. And you don't pay tax on it when you pull it out. Now, you still pay income tax. You're paying income tax on all this money, but you don't pay self-employment tax on the distributions because that's your distribution as an owner of a company, not as an employee. So if you have a $100,000 business and you pay yourself a $50,000 payroll, now you just pay self-employment tax, what is FICA tax effectively, on the $50K, not on the full 100 like you would as a sole proprietor. Now, all that being said, there's one other component we haven't discussed, and it's the QBI deduction, qualified business income deduction. It's important to have an accountant do all this for you because depending on your type of business, depending on how much you make, and depending on how much your salary needs to be for your S Corp, all of that impacts how much the S Corp strategy is going to benefit you. You know, if we look at a situation where we have a client, we have all their books and records, we know what kind of business they're in, and we're running projections like, okay, if we did an S corporation, how much could we potentially save this client? And if we say, okay, we can save them $10,000, we're going to charge $1,000 to do all this. The client wins, right? That's a great deal. But if you're only going to save $1,000 from doing all this, and then your CPA is going to charge you $1,000, probably push, right? There's no need to do that. Financially, it doesn't make sense. That's why you need to have an accountant involved. And honestly, it's something you should probably review year over year if your income's going up.
So the QBI, just to clarify, that is something you would be eligible for on the personal income tax side. And based on how much, or if you qualify for that and you're bringing in self-employment income, that might be enough of a deduction to kind of bring your tax liability down. But otherwise, depending on how much you make, doing an S corp and getting those tax savings by taking some of your personal income as a distribution, um, and only having a portion of it taxed, that is something that you would need to weigh. I know some people, when they say, "Oh, if you make X number of dollars, you're good, and S corp is going to benefit you." But it sounds like there are some more idiosyncrasies that you should probably feel out
Yeah.
before you make that move.
It's funny. What's the classic accountant answer? It's like it depends. You know,
Yeah,
it
yeah, yeah.
depends. It's just what I don't know. It depends. So yes, you're absolutely right. The QBI deduction at its base is a 20% deduction on your business income. If you stay as a sole proprietor and your business income is $100,000, then you get the full QBI. You're going to get a $20,000 deduction. That's good. When you swap to the S corp and you pay yourself those wages, the business gets to deduct those wages, right? And you add the wages as a W2 income on your 1040. So the income is the same either way, but on the business return, because the business is deducting the wages, right? If you pay yourself $50,000 and the business made 100K, now your business income is only $50,000. So you get QBI or 20% on 50,000, not 100,000 like you did as a sole proprietor.
Mm-hmm.
So you traded a 20% deduction to save 15.3% in self-employment tax. That might not make sense in some scenarios. It really depends again on how much are your wages going to be and how much is your overall income. There is a crossover where it does make sense, even though I'm telling you, one number, 20%, is bigger than 15.3%. You would think, like, I just always want the 20. That's not always the case. It really it depends on what we call reasonable compensation, your wages need to be
Mm-hmm.
for the S corp. It all hinges on that. So it's a client by client thing. I know nobody wants to hear that because it's like the accountant's just trying to sell, but it really is. I can't. Your business, literally me and you right now. You said I make X amount of dollars. What should I do? I would say I don't know. We gotta dig deeper, right?
Dig deeper. You talked about S corps. What are some other tax saving strategies you'd recommend for small business owners that you help your clients out with?
Yeah, assets. So asset purchases at the end of the year, really looking at those expenses and saying, okay, if you're going to buy, for example, a vehicle. Now, with our content creators, vehicles, a lot of them don't need vehicles. Some of them have channels specifically dedicated vehicles. They're not as asset heavy, but looking at those purchases and saying like, hey, if we buy this before December 31st, that could be a big write-off for this year. That is a very common one. Retirement account selection. So solo 401k, SEP IRA, looking at those things, even just basic personal IRAs, whether it be traditional or Roth. Those are the big ones. Other things, we have some content creators who their children play a very active role in their channels. And so paying their children a wage is really nice because if they pay under a certain amount, the child doesn't have to basically worry about filing a tax return or anything like that because they're under the standard deduction amount. But it's a way to basically get a deduction for your business. The money stays within the family. Yes, it's going to your child, but you can put it in your child's, let's say, IRA. And now your child from a very early age already has a retirement account established that can grow and compound tax free. That one's very nuanced. It applies to a very specific group of clients. You have to have children, but two, you have to have, but you got to have some kind of involvement. You can't just do this only because you have children. The children have to be involved to some extent. Like I said, we have content creators who have a family YouTube channel where the children are very present in every single video. The content is based around the family in general. So that's where you can, if you were subjected to an audit, you stand a very strong case of coming out on the other side of that.
Well,
That's a
beyond the
strategy.
scope of content creation, like
Yeah.
a business owner might have a teenage kid who knows how to do social media.
Administrative.
Any
Yeah, anything like that. I mean,
farmhand.
yeah,
I mean, any other way that you can kind of get your kids involved in the family business and compensate them. That's cool.
yeah,
So there's a
absolutely.
limit that you can pay them, and
They won't have basically any tax impact because it's under their
okay.
standard deduction. So they're basically the standard deduction is going to wipe out any income that they have, provided it stays under the limit. So it's what's actually happening is they're getting the money. They don't have to pay tax on the money, and then you can contribute that because they have earned income to a retirement account or something like that. Now, that being said, you don't have to just stick to that income limit, right? If in your, like you said, if you have a child who's helping you with social media and you make them a true like part-time wage laborer and you just pay them based on hours, right? They may exceed that limit,
Hmm.
but you still get a that's still a large benefit because again, you're getting to pay your child to help you out and they can still, contribute to a retirement account or something like that. There are all kinds of benefits to that. And it does go beyond just content creators. You could have, I run an accounting business. I have a 3-year-old daughter. As soon as she, comes of age where she can actually help me, yeah,
Hmm.
I'll have her running around doing stuff all the time. Not because I want to get any kind of tax deduction, just because I need the help. So,
And when she asks for a raise on her allowance, you could be like, "Girl,
yeah,
you have
absolutely
a
not.
fully funded retirement account.
Absolutely not. Yeah.
I gave you everything." Yeah,
Yeah.
no.
No, I'm
I,
kidding. Yeah. It's
I'm
it's
I'm
fun.
glad that you talked about the limit. Like it's okay to exceed the limit. I think some people when they hear limits, they get freaked out and they're like, "Oh, I can only go up to this amount." It's like, well, it's only tax beneficial up to that amount, but you can still go higher. And like if that's going to be a good situation for you and your kid, don't get freaked out by like specific numbers. One thing I gotta mention this. I recently saw a little like exchange on social media. Somebody I know talking about like getting a pay raise, and then a comment was like, "Oh, it's like, well, now you're just gonna have to pay more in taxes." I'm like, "Yeah, but it doesn't work." They were thinking that it's like, "Oh no, if you go over like the tax limit, you're gonna end up losing money by making more money." I'm like, "That's not how brackets work." But
There's no
anyways,
100% tax bracket.
yes.
There is no 100%
Like,
tax bracket. If you told me right now, like, hey, I'll give you $1 billion, but you got to pay the tax on it, I would take that deal every single day of the week. I'll
yes,
ask, like, do you want me to report to the IRS and do all the filings and everything for you? You're
you're
like,
still
absolutely.
making more money
Yes.
than you were when you were making less money, but
When I started at a larger firm when I was coming up, and a partner told me very early on, they brought me in on a meeting with the client. I was very green. I was just sitting there, I was not contributing or anything, just taking notes. And the client was saying something to that effect, like, I don't think it makes sense for me to make more money in, like, they were running a business and they were, I shouldn't have customers pay me because of this and that. And the partner said, don't let the tax tail wag the dog. Run your business and let the taxes be an afterthought. Let the accountant worry about that. Go run your business and just stack up as much money as you can. Like, that will never be a bad thing for the most part. I mean, I can think of only the most nuanced situation where you may say, like, on December 31st, yes, if a client could pay me literally tomorrow and I can push that income to next year, sure. But most of the time, it's you're splitting hairs. It's like, just get the money, right? And just worry about it
well,
afterwards.
you mentioned business assets and deductions too. Sometimes it seems like people are spending money in order to take a tax deduction and not understanding that they're still spending that money. Like if you don't need to buy that asset, or you're buying this overly expensive vehicle thinking that the tax advantage is going to save you money, it's like you're still spending it. You're not getting anything for free. There's just a little bit of a tax benefit you might receive. But if you're spending cash you don't need to, then you're just wasting money at that point. And I think
Yes.
that's something that a lot of people miss. A lot of people on TikTok seem to miss that.
No, you're right.
A
Yeah.
lot of
Other misconceptions. I find a new one every day when I look at tax I say tax Twitter. I'm on Twitter a lot, but tax TikTok and finance TikTok, all the finance bros, they have a new thing every week, it seems like. I'm trying to think of another misconception. That is definitely the biggest. Like, oh, I'm saving taxes. I'm spending 100,000 on this car. Like, you spend 100,000 on a car. That like, did you save? Like, great, you saved on taxes, but you spent 100,000 on a car. Like, is that what you needed? Is that what for a business that's bleeding cash and has no other assets, no money, and they're not producing every year, might not be the best decision, right? And yeah, you saved on taxes, and you could tell your friends that, but I don't know. It's probably not the what is it? It's not the flex you think it is. Isn't that the saying? The saying? It's crazy because people, they just try to over optimize for these things and try to know every little detail instead of just running your business. Just make the best decision for your business.
And everything else is kind of secondary. It's a bonus. But if you're losing sleep over, all of the tax stuff, that's not going to be as beneficial to you as just actually focusing on like making a good product, serving your customers well, taking care of all of those fundamentals. Stay focused on those things. And
I'm a tax accountant.
When you get confused by the rest of the stuff.
There you go. The plug. I appreciate you. Listen, I run a tax firm, and I do have a business partner. We rarely, if ever, talk about taxes. What we spend all of our time talking about is how can we literally serve our clients better? What can we do to speed up our processes internally, and what can we do to get the client their deliverable, keep them compliant, give them the advice they need. How can we do that better and faster? We don't sit there in a room and say like, how can we optimize our business so that we pay as little in taxes as possible? Again, let's just print money over here, and as soon as we're done with that, we'll worry about the tax. We'll worry about taxes when the time comes. We save. In our business, we have a percentage that we save. We use profit first. So there's a percentage of money we save every month that goes directly to a tax account, and we don't worry about it. We pay estimates. If you don't know what estimates are, that's another conversation we can have. But we pay our quarterly estimated taxes, and that's it. We're a tax firm. Like, if anybody's going to do it, the most optimized way is probably going to be us. But we spend so little time doing it because, again, running your business, make the better product, serve your clients better, your customers better. That's what you should be focusing on as the owner.
Love it. I should mention, we initially got connected through a mutual friend of ours at Relay, which is the business bank I use. I imagine you use them too.
I use them too.
And I know you're on their new their advisor directory, which is launching very soon, next week, in fact. Can you tell me a little bit more about your relationship with Relay and what they're rolling out pretty soon with this directory?
Yeah, no, Relay's fantastic. First and foremost, I use them. Our firm uses them as that's where we have our business bank account. But also, once you're an advisor or an accountant, you actually get your own little portal in a way where you can have all your clients listed in one place so that you can navigate it very quickly. You don't have to have 27 bank logins for all of your different clients to do all their bookkeeping. So that, for me, as just a CPA, as an accountant doing bookkeeping, that was very important. But also just the banking in general, I just love the actual product itself. Well, again, we use it for our firm, so it's a great product. I love the people over there. I have a representative, and she is incredible. I mean, when it comes to client setup, all these different things, she's so helpful, and she's helped me navigate client situations. But yeah, like you said, now they're rolling out this advisor directory where now, if you're a small business and you don't have an accountant you can work with, or you're working with already, you can actually go there to find an advisor, and tax, bookkeeping, whatever it is. So for example, I will be listed there. You could go and search me or navigate, scroll through the pages, find me. And, that's really cool. It's just another thing that, at a traditional bank, you're probably not going to get, that you can, if you're on Relay, you're banking, you're doing all those things already anyway. And now you can find a tax advisor as well. That's pretty cool. I mean, Relay is going to be at some point, almost the one-stop shop for I feel like everything. But yeah.
Yeah, I'm impressed with what they're building out there.
Hmm.
I'm not an advisor, but like on the end user side, I'm really impressed with their platform. It's just I appreciate it. It's a really snazzy platform. You can learn more about the bells and whistles, what it looks like. I have a video review. I'll link to that in the description if you want to check it out. But they're rolling out some of these educational resources. They have webinars and now this advisor directory. They have a live virtual event coming up June 12th. How to win through smart business finance. It's for entrepreneurs, financial advisors, technology leaders. So that's the next one. And I think they even have like a $1,000 giveaway. So you might
Yeah.
want to check that out. And they'll be talking more about the advisor directory that they are launching very soon. So thank you again to Relay for not just supporting Self-Employment Sidekick, but just being a supporter of small business in general. You guys are awesome. Plug completed.
Shameless plug here, by the way. There's nothing better than when we have a client. I truly mean this. No plug. Actually, when we have a client on Relay, it's so nice because literally QuickBooks has a feature where all of your clients, if you're the accountant, all of your clients are listed. Relay has the same feature. When it comes to doing the bookkeeping and reconciling all the bank accounts and stuff like that, genuinely, it is so nice having, as many clients as we can in Relay, as many clients as we can in, I say QuickBooks, that's the platform we use. It can be Xero. That piece is not as important, but having those, side by side and just we can get reconciliations done like that. I mean, we're just moving through them. It's so nice. Like again, shameless plug for Relay, but I'm only plugging them because the product itself is actually very good. I love it. I love using Relay. I'm so thankful for, again, the partner representative we have and everybody there. They're not paying me to say this, but I do genuinely enjoy the product as a whole.
I do too. I mean, they do pay me sometimes to run an endorsement on the channel, but I would not take their money if I didn't genuinely enjoy using them and think that they are a legit good company and good at what they do and care about their customers. It's cool to hear about your benefit, like as an advisor on that end, and how they make your life easier over there too.
We get a small referral bonus when we do bring clients on, but it's not like even without that. I shouldn't say this out loud because they're going to listen and say we're cutting your little referral bonus, but I would use it regardless. I mean, the referral bonus, we do not sign clients up for the bonus. We sign them up because it's so nice having all of them in one place so that we can, again, move through our work and advise a lot faster. I really just, I'm a big fan of the product and what they've done.
See that we're not chilling.
We're not.
We're happy customers ourselves.
That's right.
But please don't cut Garrett's referral bonus.
Please don't
keep that up.
Deanna, if you're listening, please do not cut my referral bonus.
Well, hey, Garrett, thank you so much again for just taking some time to hang out, sharing some helpful information with our viewers. Where can people learn more about you and maybe connect with you if they need some help with their accounting and tax needs?
Yeah, for sure. Thank you. So I'm on Twitter. I'm very active on Twitter. Like I said earlier, at your local tax guy. You can also check out our website. It's just gameonfinancial.com. Even there, you can even book a discovery call if you want to talk. We can hash it out. It is an unpaid call, so you don't have to worry about paying anything to hop on. I'll spend the time and get to know you a little bit and see if we can service you. But yeah, website and Twitter, that's probably the best places. We do have a YouTube channel. Like I said, it hasn't been active since last year, but feel free to go check it out. We do have some informational videos on there. But yeah, that's pretty much it. We try and keep it pretty slim when it comes to that stuff because if you're everywhere, you're nowhere. I feel like having a few channels where people can find us is probably best. But yeah,
wisdom right there. I feel like there are several things you talked about, and we're like, oh man, we could take this conversation in a
don't let the tax tail
different
wag
direction.
The dog. Yeah, that's the boomer saying I'm gonna leave with. Don't let the tax tail wag the dog. I've really enjoyed this. This has been a lot of fun and kind of woke me up. I was going through. I just eaten lunch before this call. I was about to, I was going through that midday coma, but this woke me up, and I'm just grateful for the time.
I'm thankful for you and you taking the time, and maybe we can reconnect again sometime in the future. But Thank
Absolutely.
you. And yeah, I'll link to everything you mentioned below. Check out Garrett's channel, subscribe, even though he doesn't post there that often. I'm sure it's still really good content that you can benefit from. One thing I'll say is, and one of the missions here at Self-Employment Sidekick is just to encourage you that you don't have to go this alone. Like there's people like Garrett, there's other people who are out there who can help you answer questions, or just have a good friendly conversation like we just did, and let you know that you're not alone, and that you go a lot much further and more joyfully when you have somebody you can talk to, somebody in your corner. So if you need any help, if there's any other way that I could benefit you, if you have any questions, you just want somebody to bounce some ideas off of, you can reach out to me at selfemploymentsidekick.com. I would love to learn more about you and what you have going on. Thank you for watching, and we'll see you in the next one.